Welcome back, and this is our number 2 of Tampa Home Talk, and that was right on time, as you were too, Leo, looking for the intro bed to come replay. So, all right, let's get to the stats and the numbers for hour 2. What was your call now, Pat? Somebody was asking about those. They were looking for our numbers for the morning.
You put your glasses on. That's awesome.
They're not going to be able. They were concerned they're not going to be able to find a house. Every week they said, you know, they've been listening, and they said it just keeps getting lower and lower. I told them I thought it was about 111 homes left.
I'm almost to the point where I'm just going to put up a cardboard sign that just says the end is near. I mean, if you're looking for a new home, that's where we're at. I mean, the end is near. Doomsday. I'm going to grow a beard, walk around in a gray cloak, and just have that sign.
So, joining us for this next hour, we're going to chat a little bit about some residential stuff, but I want to go ahead and introduce our guest hanging with us for this hour, Mr. Tom Brudebaker. He's with Tampa Residential Realty. Welcome.
Tampa Commercial Business Brokers.
Yeah, thank you for cleaning that up for me, because I totally jacked that. But he was saying he's a statistician. Was that what you said?
Statistician, state certified appraiser.
Okay. So we've been tracking the numbers since COVID. I think you'll love this. I'll actually give you this one. You can, well, it's not all of them, but it's part of them since this year. We've got the other ones on a different sheet, but I will tell you, here's the number. So here's what we pull, Tom, just so you know. We go into the MLS every Friday morning, and we take out like condos, townhomes, villas, mobile homes. We take all those out. So we're just looking at single family homes just to get a feel for the market, because that's the bulk of what most people want, right? So we're looking at how many homes are active, pending, sold. We're following all the stats. And so we look at 3 counties. We look at Hillsborough, Pasco, and Pinellas. And so in our numbers, it includes single family homes for those 3 counties. And so this week, the number of active homes on the market was 695. It's one of the lowest ones we've had in a little while. Last week, it was 799 active listings, so we have even less than we had over 100 homes less than we had last week at this time. A number of solds are way up too. Came in the last 7 days of 1242. That's how many single family homes have sold in 3 counties. Last week it was 1,018, and the number of pending home sales is 1165, and last week it was 1130. So those pendings and solds keep going up. Actives and everything keep going down. And that kind of leads us into our next segment, which we're going to talk a little bit about the home affordability decreasing in the Tampa metro area alongside with national trends, right? Same as other cities are seeing all across the U.S. So let's just chat a little bit about, well, we'll get into that in a second. So stick around for that. And if you want, more up-to-date information on your particular neighborhood, what your home's value is, or any of that stuff, you can call or text us at our off-air number, which is 813-377-2775. We can give you a market analysis or evaluation on your home. 813-377-2775. Again, 813-377-2775. So, Tom, let's chat a little bit about the background. So, for some people, for example, Leo hasn't been here forever, so he might not remember, but I remember when I was a kid, Tampa was around, and I know Pat George will remember. Do you remember a company called Tampa Realty? Pat, do you remember that?
Well, of course I do. I never thought they went away.
So talk about the story, because they technically did, and then you guys revived them. So let's chat about
that. Doris Killian opened Tampa in 1968. In 1998, Coldwell Banker purchased them, and they went dormant, and I opened the old company.
So he revived Tampa, and when did you guys do that? What year?
2013.
Okay. And so you do a lot of things. You do a lot of, on the commercial side, you do a lot of business buy and sell.
My business is pretty much split between commercial real estate and businesses. Although I do own a residential brokerage, I don't really foster that side of it too much, and I don't sell any houses myself.
And I know your wife. Her and I were actually in the same class a couple of moons ago for our
Yes.
broker license. So let's chat a little bit about the affordability, and then we'll hop back on over to Tam Bay and tell the listener a little bit more about you guys. Pretty fascinating story, I think, how you guys revived that old realty company that was around before I was alive and I was from here. So I knew Pat George would remember the name. So, homes in the Tampa area, they're actually less affordable second quarter. This is the current reports. And with these numbers that we're tracking every week, we can see that's going to be consistent for the third quarter as well, but they're typically less affordable right now than the historic averages, alongside that national decline of home affordability, while average workers are actually soaring in prices. So what that says is basically that the wages are going up and affordability is dropping. So really, when you look at this, like just stepping outside of this information, this is that bigger divide in what we've kind of mentioned briefly in the past, as far as like the middle class kind of being wiped out. Wouldn't you say?
I wouldn't go as far to say the middle
but
class.
that's like, if it continued like this, that would be the track.
But yeah, I mean,
think.
if you have everyone in the United States that can pick wherever they want to live and they decide they want to live in Florida, that's going to definitely drive up prices. I mean, it's just supply and demand.
Yeah.
And that's just
some of the other economic sectors, they're seeing gradual recoveries from the pandemic, but home affordability just keeps making this backward slide. So despite the 22% spike in median home prices the same quarter of 2020, which that's kind of a little bit skewed, right? Because that was right after COVID. But we're at a record of 305 for the median prices right here in the Tampa Bay area. And about 61% of the counties in the nation, they have enough data to analyze, saw the median home price for single-family homes and condos increase by at least 10% in this quarter. And this was according to a report from Adam Data, which, supplies some pretty good data there.
I owned an appraisal firm for 16 years, and back in the height of the market, 2006, we were making 2 to 2.5% monthly adjustments for time upward. And
so that's a very relevant point. If you don't mind, could you just break that down and tell the listener what that means when you say you're adjusting 2.5% for time? Because we talk all the time about how appraisers pull, and I know how they pull data, but the average person doesn't know what you're talking about.
Right. We analyze the data 12 to 24 months prior, and then we look at this 12 months, and then we're able to measure the appreciation, how much the properties have gone up. And like you said, I'll do a very controlled study.
Yeah.
I'll take very secure areas, Carrollwood, very stable markets, and then I measure it, and I use square footage as my accuracy. Okay? And then we're able to measure how much annually it's gone up, divide that by 12. And then if we're appraising something that was contracted 6 months ago and it went up 2% a month, we'll make a 12% upward adjustment for time. And that's the only way anything would ever appraise out today.
Yeah, we do it kind of similar. So on the real estate side, we're going to look at it a little bit different than appraisers, although I do use a lot of the same similarities that appraisers do in terms of following the USPAP guidelines within a 1 mile radius, 20% of the square footage, all that sort of stuff. But the time, so basically what that means is something that was purchased a year ago is not worth the same value as it is today, and we're seeing that right away. We can see that immediately in the data when we pull. So I did comps for a listing I went to last night. Prime example, and I try not to cross the major roads, which I know underwriting gets hung up on that stuff. Even if it's within a mile, we try to stay within that concentrated area. And the data that I'm pulling, you can see it very obviously in the numbers from one comparable home, listing to another. I pull it. There's none or very low number of active listings. So in this particular listing I went to last night, there was none. The active listings were 0. There was 2 that were pending, and those numbers were substantially higher than everything else that was sold. And that's the pending sales, meaning they have not yet closed, but they're under contract. And then the sold sales, as you look back in time, the newer ones, there was one of the exceptions in there, but most of the newer sales, like closer to today's date, had higher prices than those associated even. We're not even looking 6 months back unless we don't have enough data, just because I think the data is so irrelevant, really, for what we're looking at to price a home today to put it on the market.
The flaw in the appraisal process is exactly that. We're using historical sales data to determine today's value, and that's why we make those time adjustments.
Yeah, I love it. We're going to continue this conversation a little bit more and just chat about some more of the things in the Adam data report. And then we're going to continue on the conversation with Tom and just talk about, you'll love this too, Leo. Look, there's even Hernando in some of our numbers here, which we're going to chat about when we come back.
Hernando's the next
Very
Pasco.
infatuated with Hernando. I think you're probably right. All right, this is Tampa Home Talk. Our off-air number, if you want to chime in on the conversation, you can call or text 813-377-2775. Again, call or text 813-377-2775. We're happy to give you some info. 813-377-2775. We'll be back in just a moment.
Welcome home. This is Tampa Home Talk. You're listening to
Tampa Home Talk.
Tampa Home Talk. You're listening to specifically Katrina Madewell.
And Mr. Tom Brady Baker. Leo Kane hanging out. Adam Talley is already out.
Yep, he was in for his first hour. I mean, he's going to have a busy day today because after today, he's not going to be able to do anything till like Thursday.
Pretty much.
So yeah, he's got to get everything done today. I'm surprised we had him at all.
I know, me too. So basically, let's go back to the numbers a little bit. So this is up 48%. Basically, it's up from 48% of the counties in the second quarter of 2020, highest point in 2 years. Home prices have actually increased faster than wages, not surprising at all in much of the country. Here, I'm not surprised by that at all. But again, we're having people move from places like California and New York that have been crazy expensive for a while now. And now in the Adam data, they are counting 4 counties in the Tampa Bay metro area. So they are counting Hillsborough, Pasco, Pinellas, and Hernando. Now, Tom, the only reason why I don't factor Hernando into my numbers is the obvious. I would have to pull it from a different MLS system and add the data up, and it's not that good of an MLS system. Let's just face it, right? Like
it's very
appraisers
antiquated.
hate pulling data in Hernando, and I thought they were going to strike a deal with Pro, but they didn't actually end up doing that.
They were supposed to, and their director came from GTAR. So,
yes, I know her.
That kind of Brenda Rabbit. I think she was going to.
Yep, I know her well.
That.
Served in a lot of committees with her. Know her very well.
The agents in Hernando were intimidated, thinking that the Tampa agents were going to go take over their business, and that's the reason they didn't want to join us. That was the rumor on it like 20 years ago.
We're already doing it. Like if we're selling there, we're already a member of Hernando as a secondary board, so it's not doing anything but making data more difficult. I get it, right? Like if people had to... I think if the MLSs and the boards had to do it again, would they agree to sell data to Zillow? Probably not, right? Like, so I understand their point and their thought on it, but I just don't necessarily agree with it because as realtors, we can get access to the data anyway. So
right,
I just choose not to do it because it's a lot more difficult, and I'm not going to do that at 7 a.m. on Friday morning, which is when we pull the data. So. Couple more points on this report from Adam Data. Pasco County actually saw the largest year-over-year median increase price, up 32% to $250,000. Don't know if I totally agree with that, but that also would include North Pasco and West Pasco, so maybe.
I know. I would agree with that. This is where these were all the developers are putting in their subdivisions. This is where you're going to have this spike in inventory, and they're going to go. If they sell you a house today for $240 and they sell your neighbor one for $245, then they'll sell the one after that for $250.
It's going to keep climbing.
Yeah, so I easily believe that.
So 24% increase in Hernando County. Their median price, according to this, is now $228,900.
52 is the new 56.
And yeah, I would agree with that. And Hillsborough County saw 20% increase to $295,000, which sounds also very low, but that's probably about right. This is for second quarter data of 2021. And this one for Hillsborough is the 4th highest increase in the country among counties with at least 1 million people. So we've said that for a while, that we're very high. And last but not least, Pinellas County, the year-over-year median increased 16% to $289,900.
Yeah, I wish we could also couple this with the median income. I wish we can couple this with income to just watch the correlation happen.
Well, they're pulling it by quarter, and no one else is pulling median income really by quarter that I know of. But
yeah, I don't think the realtors are pulling it by quarter anyway.
Yeah, exactly. So, all right, Tom, what do you think about this? Like, you're seeing this on firsthand, right? And I know you're not really doing residential, you're doing commercial, but you're still measuring some stuff, I'm sure, as it relates to the residential housing market.
Correct.
And are you guys seeing as many relocations into the state as we are?
I can't comment on that. I'm not that involved in it.
Okay. Fair enough. Fair enough. But
now,
so
commercially, we do.
Okay.
I have people from New York coming down. They're buying restaurants. They tell me they're escaping the communist state of New York, and they're coming down here, and they're getting rid of their businesses in New York, and they're coming and buying them here. And we're getting a lot of relocation on the commercial side.
Have you, and this was interesting because I had really predicted that COVID was going to impact commercial more than anything. And I think it will, probably just not as much here as in some other states. Are any of those people that are moving in here buying restaurants, are they commenting about how it's hard to sell the business in New York, or are they getting buyers for that? Because I've heard that there's entire buildings almost that are empty or like a third capacity.
Yeah, they're saying that the landlords are still demanding the high rent, and they're not going to get it. I'm working with a group right now out of New York. They were paying $63,000 a month in rent. And the city of New York shut their restaurant down and a hotel, turned it into a homeless shelter.
Oh my gosh, you can't pay that. It's not fair.
And they said that the landlords are still trying to get the sky high rent, and there's a lot of vacant space there. People are fleeing New York.
Yeah, and California and Chicago and New Jersey and a lot of those other states as well. Yeah, it's so you're buying and selling businesses as well. What percentage would you say is that versus commercial?
50-50. 50% of what I'm doing, I sell businesses. Other people, a business intermediary. The other 50% is commercial real estate.
So let me ask you this. I mean, there's these statistics I've heard out there that 90% of businesses fail, or 75% of restaurants fail within so many years. Is the restaurant one, like what is the turnover on a restaurant?
Man, pretty quick. Generally about every 5 years.
So it is like most restaurants don't last more than a couple of years then.
But I've been looking for them since they survived the pandemic. They're holding on to them because now they're starting to make money again. They're doing better than their pre-COVID numbers. And now it's time to make money. I have restaurant buyers, and I can't find restaurants for them.
Wow. That's incredible, really.
Yeah, because I know like down in Henderson by where I live, like I'd say a third of the restaurants have changed over. I mean, they're brand new restaurants in the same locations.
So what kind of businesses do you represent?
I'm very much a generalist. So I do some construction companies. I do some medical, bars, restaurants, anything in business. I stay away from salons and some of the smaller stuff. It's actually hard to find salons for people. But I like construction. I like medical.
What are the what are some good businesses to buy if someone's moving here from out of state?
Everybody wants the same thing.
They're looking for an opportunity. What is it?
They want low management, so they can be an absentee owner, have the business run itself, and that's why e-commerce businesses are on fire right now.
What's an example of that?
E-commerce business,
like the low management businesses people are looking for.
E-commerce would be a good example of that, or a company that has good management in place that is hired and they know what they're doing. They can be an absentee owner. For instance, I was trying to sell a medical practice, and equity partners were looking at it, and they wouldn't have any management. They would keep a medical director on staff. So they wouldn't have to do anything but the marketing side of it and the administrative side.
So how do you handle it when the business, like the license holder, wants to retire and step out, and then there's a whole business underneath it, but someone from out of state's not going to have the local Florida license? How do you handle that scenario?
Or credentials, right, in some case.
Right. They work on daycare centers is a great example of that. The new owner has to be licensed. So they might have be an experienced director. They come in. They will operate under the seller's license for a very short period of time while they get theirs.
Is that like a year or 6 months, or what is that? What's that short period of time?
No, we're talking weeks.
Oh, wow.
It depends on the business.
There's too much liability otherwise.
Yeah, I mean, that would make sense. I don't know if I would want someone to come in and operate my real estate practice with me still being the broker. I don't know if that would work out. But so what kind of trends are you seeing on the commercial side, especially after COVID? Because, I mean, there were some changes.
I got destroyed when COVID first started, January of 20. I had a lot of big investments under contract. And once it started, every single investor
got scared.
Canceled the contract. So we had to start all over again. Now it's better than it was before. But we're having the same issues that there is in residential. We don't have the inventory, especially in the industrial market.
Oh, I was going to ask you about that. Like, how is inventory right now? So same thing.
Very, very low.
So building shortage, they don't have stuff to sell.
Correct.
So how big is the increase or the impact on commercial period? Like, does it depend on the industry? Or?
Property values are increasing. Inventory is very, very tight.
So, I mean, we look at the absorption rate here and it probably depends on the business and what kind of, business or how it's zoned. But I know residential real estate's like a 2-week absorption rate right now, as a whole. What's that look like for commercial?
It depends. We can go on LoopNet. LoopNet is the Zillow of commercial. And you'll find properties on there, but they're not the great properties.
You have your own MLS, right? Commercial or no?
Yes, we have several databases. I pay $26,000 a year in data.
Wow.
It's very expensive. CoStar and LoopNet is number one. There's Catalyst and Crexy, and there's other commercial databases.
But not everything is there, right? On LoopNet, which is open to the public, like Zillow.
Right. It's on CoStar. CoStar owns LoopNet, and you can put your listings on CoStar for free. But it costs a king's ransom to search that database. Now to put your listing onto LoopNet, that's another king's ransom.
Got it.
And those two alone, I pay $840 a month for those databases.
All right, this is Tampa Home Talk. Stick around. We'll be back right after this break for some more commercial talk. Welcome home. This is Tampa Home Talk. Thanks so much for joining us. And if you'd like to connect with myself or our guest, Mr. Tom Brudebaker, about buying a business or some commercial real estate, you can call or text 813-377-2775, and we'll know you're looking for Tom. 813-377-2775. So let's talk about the obvious, right? We get it all the time. I had a seller last night that I met with. He's like, I'm going to go ahead and sell now while prices are high because they're going to crash. And I say the same thing every week, that there's too much real money in the market for it to crash. It'll slow down when we start seeing some economic indicators that slow down, like people losing jobs and that sort of stuff. But I don't think it's going to crash, not as a whole. It's just not going to. Too much real money in it right now. Is that the same for commercial?
Commercial is not going to crash. There's actually bad rumors right now about commercial real estate crashing. I'll talk about that in a few minutes. But the commercial market follows the residential market by 2 years. So we're good for a while. And a lot of people will hate me for saying this, but the residential market needs a correction.
Well, definitely.
It needs to slow down.
Definitely.
It's appreciating too fast. Mm-hmm. People can't buy a home.
Mm-hmm.
There's a lot of heartache out there. So,
I agree, but it's hard. There's still a lot of REITs buying properties. There's still a lot of hedge funds buying properties.
Supply and demand. The only thing that's going to slow it down, I think, is a rise in interest rates.
I think so, too.
And that's overdue as well.
Yes.
We are. I've been saying all along they should increase it about 0.25% per month until they see enough obvious slowdown, then stop. That's the right time.
Well, but don't do what Jimmy Carter did.
Yeah, you can't.
He went up to 23%. He was trying to slow inflation.
Yeah, that will never work like that. There'd be heads rolling, but
we haven't seen inflation like 5-6% would be astronomical in today's.
I think literally 0.25%, a quarter, would slow things down enough to even things out.
I agree.
Wouldn't be too drastic. It would be slow enough, that it would be just a trickle right into the economy in terms of inflation.
So trickle down economics?
Well, I mean, you got to slow things down a little bit. I would agree they're moving way too quickly. All the first-time home buyers are priced completely out of the market. They don't have enough cash to compete with, it's hard enough just to get an offer accepted.
I would never, if I was a seller, I would not want to deal with a first-time home buyer.
Yeah, I mean, FHA and VA off the table. Like, we haven't even seen an FHA or VA offer get accepted in so long that it's literally cash or conventional. And they're taking the ones that are giving them a high offer, willing to waive appraisal.
We have uninformed sellers in that case. As an appraiser, I appraised 11,000 properties in my day. In the residential market, the FHA appraisal and the conventional appraisal is the same. The property has to conform to standards. You can't have rotted wood. There's some guidelines you have to follow. But if it's a decent house, it's going to pass the same appraiser.
Right.
There's no difference. So the agents need to inform this.
They're slight. Like, you can't have any chipped or peeling paint if the house was built before 78. Some little stuff like that, and I would agree. But typically people see as FHA or VA as a less stronger buyer, and you see that in the offer as well in terms of what the down payment is, what the escrow deposit is. So I think in general those kind of go hand in hand, right? Like, the days of a VA offer with $1,000 escrow just don't exist in this market, right? It's pretty fair.
Absolutely.
So, as it relates to commercial, I mean, I love your opinion on it as an appraiser for sure, and I would agree a lot of it's the same. We just had a property where the pool was literally green. There was probably some plants growing out of it, and the listing agent did not want to clean it up, and I'm like, I really hope this doesn't get tagged. Well, appraiser really appraised it fine, but what happened was when it went to underwriting and the investor looked at it, Fannie Mae said, no, we're considering this a sanitary and safety issue.
It is.
You need to clean the pool up. So that pool had to be a little bit better, much better looking than it was before it would pass.
So you're an appraiser. So in an appraiser's in an obvious defect scenario where it's a minimum property standards item, such as the pool being green, and the appraiser just doesn't flag it, that should be... Well,
they want to know more, like, does the pump work? So if the pump and stuff works and the electric's on, but the pool's green, it doesn't take long to turn a pool green, really. I mean, a week of rain, you'll have a green pool, right? If nothing's going on with it.
Right. They don't like green pools.
Yeah. We try to minimize that. I don't let any green pools happen on my listings because I know it's going to get flagged. I know it will. But yeah, it took probably a solid week of cleaning up on that pool to get it through the minimum standards. So, but one of the things you were commenting on the break was apartment buildings. You're saying a lot of people are moving here from out of state that really want to buy apartment buildings?
It's the hedge funds and the REITs. Oh. They buy the Class A apartment buildings, the newer, sexy 500-unit apartment buildings. They're the ones buying those. Now, they will never hit the market. So these multifamily brokers have a list of all their hedge funds. So when they have one coming on the market, they just go down the list, they find a buyer, it never hits the market. You can't go on LoopNet and find a nice apartment building for sale. They don't exist. So we have to go behind the scenes and call these brokers and find out what they have. Yeah,
in many ways, commercial real estate operates a lot like residential real estate did back in the day, like pre-MLS data sharing, right? Where it literally was the broker matching the buyer, the broker matching the other broker's buyer. Like, that's pretty much how real estate used to be, and I'd say commercial is still very much that way.
Commercial, I don't put my listings in the MLS, and most brokers don't. Maybe 5 or 10% of the commercial listings will make it in the MLS.
Are you talking about commercial or residential?
Commercial.
Or both? Okay.
We don't have any offer of compensation, and those are deals you have to make with the broker while you're transacting.
So that's a thing that's very, very different, and you guys really don't subscribe to, like, Florida Realtors or NAR, right, as a commercial broker.
Right. I am a realtor. I do belong to FAR and NAR, and I belong to the commercial board, which is Florida Gulf Coast Commercial Association Realtors.
But that's like optional. Like in the residential world, they hijack your ability to use MLS or have an e-key or any of that unless you are a member.
Right.
It's not really that way on commercial.
Well, in commercial we don't use lock boxes.
Right. Right.
So you can fully function as a commercial broker without ever joining the board, FAR or NAR.
Yeah, it's an interesting thing that we've seen, and like right now it's gotten so competitive on the real estate side that they're literally trying to control to the day with paperwork and everything. It's so regulated, like how long stuff can be off the market. Because I mean, there's many times, Tom, that I'll take a listing while we're in the preparation stage, but it's not ready to go live. It doesn't mean I'm not going to cooperate with another broker. It just means it's not ready yet. But they're really like taking that to a whole new level. Like NAR stepped in and said, no, you're going to get this waiver of MLS entry signed. You're going to tell us exactly what day it's going on the market, and you're going to supply us with all that information.
I just had an agent come to me and said, hey, I had a buyer for this house, so we wanted to set the appointment, and they weren't accepting any showings until Saturday, and this was for residential. Mm-hmm. And on Friday, it shows up pending. So the agent sticks it out there, and they double dip it.
Ah. Yeah, I mean, I know that's what they were trying to avoid. I would say in my case, that's not so. It's more of just really like a preparation type thing. Like it's just not ready. Mm-hmm. I don't have photos back. It's not staged yet. The owner's still getting stuff out, whatever it is.
A good agent will almost never list a property on the first appointment. They will have the seller go and make it show ready. You have one chance to make a first impression.
I agree with you, 100%.
And they always want to get the highest value. You want the highest value, you better have it ready to go.
Get it right out of the gate, and that's where the agent's really going to come into play. So talk a little bit about some of the cap rates that are going on out there. Like in general, what kind of cap rates are you seeing for commercial?
That's a great question. Let's talk about where to invest first, and then we'll segue into cap rate a little bit.
And let's also explain cap rate, too.
Right. Cap rate is short for capitalization rate. That is a snapshot of the investors, the purchasers' return on investment for the first year of acquisition. So year one, what is their return on investment going to make?
Yeah. So to simplify it a little bit, more so, it's like if you were to take cash and buy that, what kind of interest would you get on that return if you were like, as opposed to like taking that money and sticking in a CD, you can see what the rate is. It's kind of like how they do it in the real estate world through cap rate.
Well, here's something I have to mention first. The lower the cap rate, the higher the value.
Right.
The higher the cap rate, the lower the value. Because we take the net operating income, divide that by the cap rate to get the price.
Correct.
Okay. I'm not going to get into that too much today. But a novice investor, the first acquisition is a house. The house is going to be the lowest rate of return. You have a house, you're not going to get rich unless you're going up 2% a month in property value like we are today.
Yeah.
So it's a great time to own a house.
Yeah.
Then they graduate and go to, they'll get a quadruplex, and then they'll get a small apartment building, like in St. Petersburg, an older 8, 10, 12 unit apartment building.
Which is important to note that anything 4 units or less falls under that residential scope. The minute you hit 5 units or more, you're now under the commercial realm.
That is correct. Investors will call me and they'll say, hey, I want to buy an apartment building and I want a 10% cap rate. And immediately I know they don't know what they're talking about, because now those Class A apartment buildings that the hedge funds and the REITs buy, they're buying those at a 3.5% cap rate.
Yes.
That's it. That's is a horrible rate of return. I don't know who would buy an investment like that.
They've got an influx of cash on the stock market, like a lot of these other companies.
It is safe and
secure. They can burn investors' cash. That's how they have that low of a cap rate to buy.
The less
most people wouldn't I wouldn't put my money into a property for 3.5% cap rate.
But you also get stuck in the 1031 trap, which is the 1031 exchange when you sell real estate to buy real estate, and you have to find and spend the money anywhere or you get taxed on it.
Yeah.
That's a good topic. We should talk about that too. The 1031.
And that may change. Like from this time next year, that could very quickly change.
But here's the deal. Everyone wants to buy an apartment building, and that's what they're comfortable with. They understand residential dwellings.
Yeah, makes sense.
And they get it. Here's the problem. I would not buy an apartment. You have to rent to average people. Average people, they have deaths in the family. They lose their job. They get divorced. Life happens. They're not professionals. I would rather rent to a professional than to a person.
So you're talking about like a commercial rental or no?
Yes.
Okay.
We're going to break.
All right, so we'll talk about where to invest then. when we come back right after this break. I'm sure you guys hear the music rolling in, which means we are rolling to our final break of the show. Our off-air number is 813-377-2775. Again, 813-377-2775. That's our off-air number. You can call or text us if you want more info. And if you want to know what to invest at, stick around. We're going to tell you where's a good place to put money when we come back right after this break. 813-377-2775. We'll be back in a moment. Hang around.
Welcome home. Last segment. You've been with us for almost 2 hours. Thank you for joining us for all or part of your Friday morning. I know Pat George has been with us for the entire 2 hours, and we appreciate his producing ship. I'm still like, this market's so hot. Where should I be looking to invest my money?
The number one commodity right now is industrial.
That makes sense.
It's not sexy.
It's
but it is in
quarantine-proof.
Extreme high demand. All the retailers. You see, I want to talk about this first. There's a bad rumor that commercial real estate is crashing. Everybody says that. There's two segments of commercial that is not doing well. The one is the super regional shopping centers, your Westfield malls. Those things are going to be redevelopment projects. Right now, Amazon, rumor has it, Amazon has their eyes set on these things to fail, and they want to turn them into fulfillment centers. As a result of that, all these online retailers are opening warehouses, and therefore we have a shortage of warehouse space. The second sector is what I call institutional office. You see these big 40,000 square foot office buildings, and there's 7 cars in the front because they send everybody home to work. Those are going to be hurting bad. Now, right now in Hillsborough County, Tampa alone, we have 3 million vacant square feet of space. 2 million of that is sublease space. So that means the tenants are still paying rent on all that space. Eventually, when those leases run out, then the landlords are going to feel the pinch.
So why like in residential, I want to break a lease, I just break a lease. Why don't businesses do that? Is there different rules in effect for that? Because, I mean, like if I had a 5-year lease and I decided, hey, everyone's working from home, I'm like, I'm breaking my 5-year lease.
You'd have to file bankruptcy to do that. And a lot of these are credit tenants. And a credit tenant is a household name. Campbell Soup is a credit tenant. They were looking at renting a warehouse that I had listed. So Campbell Soup isn't going to default on their lease. So they can afford to pay it. Winn-Dixie closed a lot of stores. Sweet Bay, when Sweet Bay was around, they closed a lot of stores. They were paying $55,000 a month in rent just for one of these stores. And they paid that for several years. Well, the landlord didn't even try to sell it or lease it to somebody else until it got toward the end because they were enjoying rent for free.
So these businesses, unlike a residential, the businesses just feel obligated to or have to pay the rent then?
That is correct. So they will continue to pay until then. Baycare, different, big companies like that, they will continue to pay the rent. So if I were to buy an investment property, I would buy multi-tenanted industrial.
What is that?
Warehouse.
It's usually called flex space, where you have office in the front, warehouse in the back.
So mixed use zoning?
Yes, they might have, 5, 6, 10, 12 units in one building, all industrial. And the lease rates went up a lot. Man, a few years ago, typical lease rate was $7 a foot. And now we're up to $12 a foot. It's really increased quite a bit.
That's over what period of time?
A few years.
Wow.
It went up a lot.
Wow.
Retail is doing very well. Like I said, when you stepped out, the super regional malls are hurting bad, but you go down the street, you don't see any vacancies.
Yeah,
retail's doing very well. Now, if you go north, Pasco County, Port Richey, you might find more vacancy than you would in Tampa, but it's very low.
What about all the strip centers? There's a ton of strip centers with businesses that are shut down.
I don't see it.
Along Bush Boulevard around Armenia, and I just saw a lot of that.
Do you have a lot around you, Leo? A lot of vacancies in that area?
We have some new office I call them office condominiums, but the tall office buildings, we have a lot of those that are going up by like near Armature Works, and it's still ghost town. Those garages are completely empty.
When they were building those pre-pandemic, I thought they were crazy for building new offices because I knew the trend. We had a high vacancy rate. Right now, I'm seeing different reports from 8% to 13%. I think 13% is a closer vacancy rate for office right now. But as far as what you were saying about the retail, we only have a 4% vacancy rate on retail right now. And we have a 3% vacancy rate on industrial. And that industrial is not great industrial. You know, what I mean by great industrial, I mean dock high doors, 18 to 24 foot ceilings. You know, we're talking smaller, older.
Well, let's talk about one more thing that we don't probably want to run out of time to talk about, and that's commercial leasing having sales tax. I know that Florida Realtors has been trying to push this on a legislative level for a very long time to get rid of the tax on commercial lease. Absolutely right. Florida is the only state in the country to have commercial lease tax. Wow. Surprising. Really, I didn't know we're the only state. It's a lot of money, too, because in Hillsborough County right now, it went down, and it's been going down every year. Like you said, we've been putting pressure on the legislature to remove that. Yeah, which they still have yet to do. Hillsborough County is 7.5%. So what do they do with the money for the sales tax on commercial lease? Do you know where that money goes? What fund? I'm not sure what fund, but the state gets the majority of it, and then the counties usually get a 1% bump, except for Hillsborough. When they had the last referendum, they raised that a lot. It was a knee-jerk reaction, and no one really thought that through. Yeah. And I'm not real happy with the county commissioners. It's another whole story in itself for sure. So let's touch on the final thing, Leo, you were mentioning on 1031 exchanges. So 1031s, I mean, right now, as the time this is airing, is a great way to defer capital gain tax pretty much indefinitely, as long as you're going to hold on to some real estate. Pretty much. You just got to sell real estate and then buy real estate. It needs to be, quote unquote, like real estate, which is very loosely defined. It is very loose, yeah. So when they talk about like-kind exchanges, have you seen where people, I guess you could technically move it from residential to commercial. As long as it's investment. 4 to 5 units. Right, it has to be investment property. You can't take it from a business gain and put it in a real estate. So when they say like-kind, doesn't mean you can go from warehouse to warehouse. You can put it from warehouse to multifamily. You can take it from multifamily to retail. It does not matter. It has to be like-kind. However, meaning just real estate. Yes, just real estate. If someone's going to exercise a 1031 exchange, they cannot accept any funds at closing. It has to go to a third-party intermediary. Yeah, qualified. We have to set that up ahead of time. Yep. They have 45 days to identify a property and 180 days to close that property. And that's where they get tricky because, like, you're trying to get offers accepted. You can't get offers accepted, and that's how really bad real estate moves. Yeah. Because they have to spend the money. Well, they usually just get it. You want to get all that done in advance before you actually close or delay closing. You know, don't take the money. That's the big thing right there. So, all right, this is Tampa Home Talk. Great having you on, Tom. Thanks so much for joining us. Thank you. And it's Brood Baker. Let me correct you. Brood Baker, no D, with Tampa Bay Realty. This is Tampa Home Talk, and I'm your host, Katrina Madewell of Keller Williams Realty. Thanks so much for joining us this week, and have a safe 4th of July. We'll be back next week at 8 a.m.